Don't buy real estate in big cities. I've said this probably 6-7 years ago. And yesterday I came across a very interesting study showing that anyone who purchased real estate in New York City after 2009 is currently underwater. That's not a surprise. We all know everything is extremely overpriced, and the maintenance of these buildings is extremely expensive. It's not just buy the building. I ran a very interesting case study last year. We made a comparison with renting the exact same unit in Hudson Yards for $5,000 a month, one bedroom apartment, everything included, versus owning the exact same apartment outright for about $3.5 to $4 million. And owning it came up with much greater price tag. You have HOA, you have maintenance, you have tips here and there, you have to furnishing, you have property taxes, you have closing costs. Then at some point, if you decide to sell it, you still have to pay taxes on this. So it's much more complicated than you can think of. Also, if you just have a span of 10 years, let's say you come here to the city, let's say you're planning to live here for 10 years, business, work, startup, whatsoever. Let's say you pay $5,000 a month, right? You live there every single year will cost you just for rent $60,000, and that's it. You don't pay HOA, could be another $1,000, $1,500, $2,000. There are crazy buildings in the city, especially in southern place. You will see crazy listings. You will see penthouses that have $9,000 HOA fee every single month, which is mind-blowing. So like I said, you spend 10 years in the city, you pay $60,000 per year, that's $600K. That's it, that's all you have to spend. A lot of people will say, but gee, that's $600K, I could have paid this towards my mortgage, towards my equity, I could have buy. No, you cannot buy the apartment. Like I said, the same exact apartment runs for $3.4 to $4 million. Back then, now, with this crazy development, I know Hudson Yards might be even upwards of $5 million. And just buying it, not all of these new developments will essentially allow you to mortgage it. A lot of them, especially when we talk about co-ops, will not let you to mortgage. You have to have the money cash to be accepted. Not get me even started with the co-ops. But let's go back to this example. So the idea here is that if you decide to buy the exact same property, right, you not only have to deal with the crazy price tag, you have to deal with the interest, which is variable, which we all know currently stuck 6.5%. You have to deal with furnishing, you have to deal with property taxes, with closing costs, you have to deal with broker fees, you have to deal with keep up and maintenance of the building, you have to deal with the HOA fee. Also, don't forget that New York has additional taxes on properties that are above certain price tag, right? There's something very similar that was implemented 2 years ago in LA. So remember this very well. The cost that you will have and you will accumulate in the beginning of your purchasing throughout this 10-year period will surpass $600K many times over. And you can play around, you can say, you can just invest the difference. Where is $600,000 versus, let's say, $2.5 million, depending how much you're paying on monthly payments, how much your equity will actually gain towards this period. But remember, every 10 years in New York City, there's a major reset in prices. A big tycoons, people who own a very amazing real estate properties in the city lost tons of money. You saw Rupert Murdoch, he lost, upwards of $10 million. Yesterday I watched a report of Tommy Hilfiger, the location in Plaza Hotel, the absolute corner of the world. You have the penthouse in the corner, and the original price that was listed for many years that no one actually paid for. Eventually he sold this penthouse on steep discount, not sure, $20-30 million under the asking price. So this is why it's a complete waste to try to purchase real estate in big cities. I'm not sure how profitable or successful could be if you just buy a home in terms of probably a house in the city, like a city house. But again, property taxes are completely destroying the value and the appreciation that you expect to get. Because a lot of these people who are spending 20, 30, 40 million dollars, they don't really look for potential flip. They just probably try to either park some cash, which, like I said, it's not really good, because the maintenance, the keep up, you have a holding cost that is very, very high when you essentially decide to jump into one of these crazy rallies, right? Then you have to deal with a lot of issues, right? Remember, there's the limitations, certain buildings changing the rules. Also, the keep of the building, the maintenance, the HOAs, they're going higher. They're not going lower. Also, the property taxes will essentially keep going higher and higher. They will not go lower. So there is this constant battle of you trying to find a reason. Why did you actually decide to buy and to spend $3-4 million upfront if you just buy cash, right? Which is obviously probably one of the best decisions if you really want to get into, instead of paying the interest, which spread out through the variable periods. You can take average of probably around, I don't know, you might go up to 30-40% of the actual purchase price could go above just from interest alone. So again, I don't really see the point. There's no actual point to own in the big cities. I think in the small cities, yeah, sure, definitely. There are deals. I know. I have friends who purchased in Pennsylvania, right? Houses a couple of years ago for like $60,000-$70,000, and they flipped them for $90,000 maybe. They have a holding cost, very minimal. The other day I was looking at very beautiful houses across the city in New Jersey that are facing the city. They have a beautiful skyline, and then I dig deeper and I found out New Jersey has one of the highest property taxes. This is one who wants to buy these mansions. They're perfectly located. They're spaced out. They're not close to each other. Beautiful views, unobstructed. You never have obstruction of these views simply because of the river. But when you go and look at the register, and when you look at how high are the property taxes in New Jersey, you kind of wonder, okay, what's the point at the end of the day, right? We try to make money first very, very hard, and then we try to preserve the capital. And at some point, some people might just decide to be smart with the money, because it's very easy to lose not only money but value in the money. And if you look at the cycles, when the Federal Reserve turns on the money printer, every cycle that follows actually has higher amount of money printed. And this cycle started on December 11th, and they started with $40 billion, which is unheard of. They don't call it money printing. They have a special term that doesn't really sound that bad, but you really want to pay very close attention to the inflation. And when I say inflation, I'm talking about the actual real inflation rate, not the one that is reported. Recently, I heard plenty of people are speculating that the current real inflation is around 8 to 9%. If you look at the prices, a lot of people wonder, but when inflation was lower, the prices were lower. Now the inflation that is reported has come down. Why the prices didn't go down as well, right? Considering same thing happens with the gas, because if you look at the prices per barrel, the prices in Europe are not going down. I have plenty of friends. We usually have at least one meeting a week, and I asked them, what's going on? What are the prices of gas, right, of petrol? And I said, no, the prices are almost the same. The price is not going lower. And this is not because the stations, reloaded on the old prices where it was expensive and they have to sell on these prices. They already get the new fuel recharge, which was on the lower price. So again, it is very easy for companies to remain selling on the higher prices, even if the economic indicators might, at least on paper, show that the prices should be lower and at least everything goes back to normal, right? But again, $2 million today, if you do nothing with this money, put them in the bank, taking an average, I would say, pretty understated expectation of 2.5% annual inflation, which in my opinion is mind-boggling, very, very low, unrealistic. It will only have a buying power of $758,000. This is a big shock for a lot of people out there, because imagine you have, $2 million today in your retirement account. Sure, no one said you're gonna live 40 more years, right? But let's add on the numbers. You're definitely gonna be shocked if this $2 million can only buy you $758,000 worth of goods in this economy in 40 years. Think about how much the prices of the average home will be. Right? Think about how much the prices of whatever usual grocery bill will look like. Right? This is why I made a video yesterday explaining why the inflation is your biggest enemy. It's not about taxes going up or down. It's not about having, let's say, bad investments. It's not about having, standard of living going higher due to the whatever migration or concentration of wealth. It's about being able to come up with your own plan, with your own finances and asset allocation plus protection to fight the inflation. Right? This is the main goal here. This is why a lot of people got rinsed yesterday on Palladium. A lot of people got rinsed on silver, and even more people gonna get rinsed on gold, but don't tell anyone. Why? Because guys, all these precious metals didn't go up in price because they became more valuable. No, they became pricier because the value of the dollar went down. So what this means, when the value of the dollar goes back up again, the value of these precious metals, or the price of these precious metals, will go lower. And it's not only this. We're currently having perpetual futures on the crypto market. And the volumes in these futures, which the retail crowd loves so far, indicates that a lot of this trading volume will be moved away from this current hype speculative trending assets. And this is very interesting because I look at a chart of last 45 years of Palladium, and the losses that happened yesterday, this gigantic red candle, were uncomfortable, right? The people who bought at the top, some people I read in reports that they don't see them breaking even maybe the next year and a half. And this is also a very similar story with the people who bought silver 10-15 years ago. So just last couple of weeks they were able to break even. People who bought the previous top in silver 10 years ago. Imagine you buy silver at the previous hype, and then you wait 10 years more or less just to break even. Let me give you a little economic perspective over here. If you currently have $2 million, in 40 years, if we adjust this amount with inflation, your $2 million will have a buying power of only $758,000. This is just a simple illustration if you get an average cycle of the inflation every single year. But we all know this is not the actual number. The actual number might actually be higher. Why? Because the Federal Reserve is printing more and more and more money.